How's it going, everyone? I want to welcome you to a brand new lecture in the TMU model series, where in this lecture, we're going to discuss order flow, which is the first step in the higher timeframe protocol. And so, without further ado, let's get into today's lecture. So what I'm going to do in this lecture is I've brought you over to TradingView, and I'm going to show you how to identify whether the higher timeframe institutional order flow is obvious, i.e. is it bullish or is it bearish? Now before I do that, I need to showcase to you why exactly identifying order flow is so important to us. Well, the reason why identifying order flow is so important to us is because if we know order flow is bullish, we can frame lower timeframe market maker buy models. And if order flow is bearish, we can frame lower timeframe market maker sell models. What do I mean by this? Well, in bullish order flow, price will expand higher, retrace lower, expand higher, retrace lower, expand higher. These expansions higher, followed by retracements lower, are going to be our market maker buy models on the lower time frame. Retracement lower, expansion higher. We have another retracement lower, expansion higher. These are our lower time frame market maker buy models. On the other hand, if order flow is bearish, price will expand lower, retrace higher, expand lower, retrace higher, expand lower. These retracements higher, followed by expansions lower, are going to be our market maker sell models on the lower time frame. Retracement higher, expansion lower, market maker sell model. Now the reason why knowing order flow is so important is because it allows us to frame those lower time frame market maker models. Without knowing order flow, we cannot frame the market maker models on the lower time frame. Now let's assume order flow is bullish, meaning price is expanding higher, retracing lower. How do we know an expansion higher will occur next? Well, if we know order flow is bullish, we need to, number one, have a drawn liquidity that has not yet been reached and a point of interest that price has retraced into. Meaning if we know order flow is bullish, we know the drawn liquidity is higher, and we know price has reached a point of interest, we then drop to the lower time frame, and then we can frame that buy side of the curve into the drawn liquidity. This here, from POI to DOL, is what we call narrative, because narrative is the story that is likely to unfold, i.e. I anticipate price going from point A to point B, I anticipate price going from point of interest to drawn liquidity. This gives me the story, the narrative, meaning as long as I trade in line with the narrative, the probability of my trade working out successfully is significantly higher. And so we've discussed order flow and why order flow is so important. We've discussed drawn liquidity, which is in the next lecture. And we've also discussed POI, which again is in a future lecture. But we're now going to focus on just order flow and how to identify whether order flow is bullish or bearish, utilizing ranges. So what I'm now going to do is I'm going to apply the ranges to our charts. This here is the daily chart. I'm just going to go into replay to here, and I'm going to remove the price just so we can see the ranges. And we're going to first discuss how we actually utilize the ranges in order to identify order flow. In order to identify whether order flow is bullish or bearish, we need to first define how price should trade at each of these levels. Well, if price reaches a range high, and when I say range high, I'm referring to this entire price range, assuming this is the range we're inside. This is IRD, internal range to marker. This is the range high, and this is ERD, external range to marker. And the entire range from IRD to ERD is our range high that we refer to, not just the individual price level in the middle. If price reaches the range high, there are two ways that we can define a change in the state delivery. If price reaches a range high, three things can occur. Either price can reach the range high, not reach the range high price level, meaning we reach IRD but don't reach the range high price level. If price would displace below this fractal range, this would be confirmed as a change in the state delivery. Meaning this is scenario one, where price reaches the range high, displaces below the fractal range. This confirms a change in the state delivery. Scenario two is where price reaches the range high price level or above, doesn't matter where it goes, price can go above the range high and displace back below IRD, this here would confirm a change in the state of delivery. Meaning in both cases we have reversals where we go from buy program into sell program. The final case is that price will displace above the range, meaning this range high now becomes a range low, which would confirm a continuation of the buy program, meaning we would now anticipate higher prices. So this is the three scenarios that can occur at a range high. Either we reach IRD and displace below the fractal range to confirm CSD, or we reach the range high and displace below IRD to confirm CSD, or displace above the range high, confirming it's now a range low, which confirms a continuation of the delivery program. If I do the exact same thing for the range low, if price reaches the range low, scenario 1 is that price reaches IRD, displace above the fractal range, confirming CSD. Price reaches the range low, displace above IRD, confirming CSD. Or price just displaces straight through the range low, it now becomes a range high, confirming a continuation of the sell program. So these are the three scenarios that can occur when price reaches a range high or a range low. And this is how we utilize the range highs and range lows. Because if price reaches the range high, produces CSD, we've now gone into a sell program. Because this was a buy program, we've now gone into a sell program. Here, price in a buy program, and we've continued the buy program. Now, what we also need to know is how price should trade at the fractal levels, because we've discussed the range high and the range low. Very simple, these are the scenarios that can occur. But what about the fractal ranges? Let's assume one of the scenarios occurs. This applies to all scenarios. Let's just assume that price reaches the range high and reduces CSD, meaning now we're in a sell program. As soon as this occurs, this here would be the smart money reversal, and price cannot break this swing high. Why? Well, if price breaks this swing high, what this means is this was not a change in the state of delivery. This was actually just a retracement lower to go higher. And therefore, this swing high cannot be broken. If price displaces below a fractal range, that fractal range must be utilized as resistance, meaning this becomes our invalidation for the sell program. Why? Well, because if price displaces back above it, this will then confirm we're going back to the range high. And then again, how price trades the range high will determine if we're going to continue through it or produce a reversal again. Meaning, if price displaces below a fractal range, must be utilized as resistance. If we displace below this fractal range, again, must be utilized as resistance in order for the sell program to continue. Why? Well, again, if price displaces above it, this will then confirm we're back into a buy program. We're going to revert to equilibrium. More on this in the drawn liquidity lecture. And then potentially we're going to continue lower, or we're going to continue higher towards the range high. So all we need to know about the fractal ranges is whenever price displaces above or below a fractal range, it must be utilized as support or resistance. This is how we utilize the fractal ranges. And so we've now discussed the range high, we've discussed the range low, we've discussed the fractal levels, and how price trades at each of those levels will determine order flow going forwards. So what I'm now going to do is I'm going to put the candlesticks back on, and I'm going to go to NASDAQ, and I'm just going to choose a time frame, and we're just going to measure order flow. Okay, we're not going to discuss drawn liquidity, we're just going to measure order flow. And how we're going to measure order flow is by utilizing a box. A red box is going to denote the invalidation for the sell program, and a blue box is going to denote an invalidation for a buy program. The reason why I utilize this box is because people can visualize what price should do. When price reaches a specific level, we know that if price reaches the red box and we're in a sell program, it must be utilized as resistance, and if not, it will become a blue box, because then that denotes a change to the state of delivery. Now, before we measure order flow, what we need to do is define which range we're going to utilize to actually measure order flow. Because of course, we could use a range and apply the logic, but if we're using a range that is too small or too big, then we're not going to correctly identify order flow on the time frame that we're viewing price. Now, the way we identify which range to use on which time frame is how price responds at the range high and fractal levels, as well as the range low, will tell us which range to use. What I mean is, I want the expansions and retracements to form at range highs, range lows, as well as the fractal levels. If we look at this buy side of the curve here, we can see expansion higher, retracement lower into range low, expansion higher into range high, retracement lower into range low, expansion higher into range high, retracement lower, doesn't reach the range low, expansion higher into range high. Meaning, this is the range I would utilize to measure order flow for this segment of price action here on the hourly time frame, because price is responding to the range low, range high, as well as the fractal levels. It's utilizing them as support and resistance. If we just go back here, what we can see is price is just consolidating. Didn't reach this range high, but it's consolidating at this range low. So for now, I anticipate expansion higher, retracement lower, potentially expansion higher. So if we continue, price is now displaced below the range high, gone back above it, utilized it as support, rejected equilibrium, and expanded lower again. And so we can see how price is responding at the fractal levels, as well as the range low. And so this is the range I would utilize on this time frame to measure order flow on NASDAQ. And so if you look at current price, what we can see, price is now displaced below this range low, which is now a range high. And so I'm going to denote this as a red box. This is my invalidation for the sell program, meaning as long as price remains below this price level here, we know the order flow is bearish. Don't worry about drawn liquidity or POI right now. Just a little hint, your invalidation level for the current delivery program is always your point of interest. Bit of a gem for you there, but we'll discuss that in the point of interest lecture. So this red box, as long as price remains below it, we're in a sell program. So we just play price out. Price retraces into it. What do you anticipate forming next? Well, expansion lower. Now what we can see, if I just go back to this candle here, what we can see is price is now displaced below a fractal range low, which is now a fractal range high. Remember what I said, once price displaces below a fractal range, it must be utilized as resistance for the sell program to continue. Price must remain below this price level here on a closing basis, meaning price cannot displace above this price level here if we're in a sell program. If you continue higher, price retraces higher. What can we anticipate next? Expansion lower. Again, your invalidation is your POI. So prime example here, this is the invalidation and the POI. Invalidation and POI. Play price out. Price is now displaced below this fractal range low, which is now a fractal range high. Invalidation level has evolved. Price has now gone above the range. So now we'd say, okay, now we're in a buy program. So this would now turn blue, but price is now closed below it again, meaning we're back into a sell program. And what do we call this move above the range high? We call this price distortion right here. Just going to label it price distortion. Price distortion is where price will color outside the lines. It'll go above a range high or below a range low. How can we anticipate price distortion? We can utilize correlated markets, which we're going to take a look at in a bit. But all you need to know is that this move higher can be anticipated by utilizing a correlated market. So let's continue. Price retraced higher, produced a false change in the state of delivery. This was not CSD. This was price distortion. And then price expanded lower into the high of the range low. As long as price remains below this price level here, order flow is bearish. Price has now reached the range low. And so how price trades at this level here is going to determine order flow. As long as price remains below this price level here, we're in a sell program. If we displace below this level here, this confirms a continuation of the sell program. If we displace above this price range here, this confirms a buy program, and so on. Let's just continue. Price now closes above this range level here. Invalidation for the buy program evolves to this range low here. If we just play price out, remember, we can't anticipate price distortion right now because we're just utilizing one market. We need to look at two markets to anticipate price distortion. But for now, we're just measuring order flow. Price retraced into the range low and expanded higher into the next fractal range high. This is perfect. This is a market maker buy model. Price is now retraced into the low ends of the range low. We're still in a buy program based on this range here. If we go back, price then displaced below this range low, confirming it's now a range high. And so this now confirms a continuation of the sell program. Price retraces into that range high, displaces lower. The invalidation level evolves to here once we closed below it. And now it's evolved again to this level here because we've now closed below it. If we continue, price is now retraced into it. Fractal market maker SAM model. Price is now displaced above this fractal range after reaching the range low. This would then become blue because now we're in a buy program. Price is now closed below it, meaning we're back into a sell program. Price is now closed above it again, back into a buy program. When price goes from sell program to buy program to sell program, this is the definition of high resistance liquidity run, i.e. consolidation. But we're back into a buy program here. Remember, we're just remaining objective here. Price continues higher. We've now closed above this fractal range here, what must it be utilized as? Support, correct. We've now reached the low ends of the range high. CSD would be confirmed here. Price is now displaced below it. This now becomes the invalidation for the sell program. We reach the range high, displaced below the fractal range, and that must be utilized as resistance. Price continues lower, displacing below this fractal range, meaning CSD would be confirmed here. Price then reaches the range low. As long as price remains below this price range here, we're in a sell program, and displacing below this price range here will confirm a continuation of the sell program. Price is now closed above the range low. This is now the invalidation for the buy program. If you continue, price is now closed below this range low, meaning now it's a range high. We're back into a sell program, meaning this move higher here was price distortion. It was a fake change in the state of delivery. So we're in a sell program now. Notice how price utilized this range high as resistance, and then expanded lower. Price reached the range low, is now retraced higher. We've now closed above the range high. This now becomes a range low. We're now in a buy program. As long as price remains above this price range here, price remains in a buy program. Price is now just consolidating between this fractal range and this range low. Price is now closed below this range low, which is now a range high. So we've had CSD, and this move higher here was price distortion, a fake CSD. This range now must be utilized as resistance. Utilized it as resistance, expanded lower. Price is now displaced below this fractal range. Invalidation for the sell program has now evolved. How do I change the size? Right here. So as long as price remains below this red box here on a closing basis, order flow is bearish. Notice the wicks. Wicks do the damage, bodies tell the story. Price utilized the range high as resistance. We've now expanded below this range low, which is now range high. As long as price remains below it, we're in a sell program. Price closed above it, validating a buy program, meaning as long as price remains above this fractal range, price remains in a buy program. What we can see is now price is displaced above this fractal range. And so as long as price utilizes that support, we're in a buy program. Price is now displaced below it. We're back into a sell program. Remember, we're just measuring order flow here. We're just remaining objective. Price now reaches the range low, initiating a retracement. Price then retraces into the range high. What can we anticipate next? Expansion lower, assuming order flow is going to continue being bearish. That was your sell model. Price is now displaced below this fractal range. This now becomes the invalidation for the sell program. Price displaces below this range low, which is now range high. This is continuation of the sell program. Price displaces below this fractal range. What must it be utilized as? If returned to resistance, meaning this is the invalidation for the sell program. Price displaces lower. Price must utilize this price range now as resistance. Price is now displaced above it. We're now back into a buy program. We now reached the range high, displaced below the fractal range. We're now into a sell program. We now displaced above the fractal range, meaning we were back into a buy program. And we've reached the range high. And so again, price needs to now remain above this level here to confirm a continuation of the buy program. And displacement above here would confirm a continuation of that buy program. Price is now displaced below it, meaning we've had a change in the state of delivery. And we've displaced below this fractal range here, meaning the invalidation for the buy program is this price range here. Price is now closed above the fractal range. As long as price utilizes it as support, order flow is bullish. Price continues higher. How we trade at this range high will determine order flow. As long as you remain above this price level here, order flow is bullish. Price is now displaced below it, meaning we're in a sell program. Invalidation for the sell program is now this range high. Price has now utilized this range low as support, retracement higher, expansion lower. Invalidation has now evolved to this price range here. Price retrace into it, utilize it as resistance, expands lower. If we continue, price is now displaced above this fractal range. So as long as price remains above it, order flow is bullish, drawn liquidity is higher. Price has now reached the range high. And so as long as price remains above this level here, order flow is bullish. Price is now displaced below this level here, meaning this is now the smart money reversal. And so price must remain below the smart money reversal. Notice the difference between this example here and this example here. the smart money reversal occurred above the high of the range high, meaning the range high was the invalidation. In this case, the smart money reversal occurred below the high of the range high, meaning the smart money reversal is the invalidation level, meaning this box must be utilized as resistance now on price. If you play price out, this is current price. As long as price remains below this red box, order flow is bearish, and therefore we look for only market maker sell models. And so I've basically walked you through about 4 weeks of price action. Now what we're going to do is we're going to apply ES to our analysis because we've just been looking at NASDAQ, but we're now also going to look at ES. Now first thing we need to do is identify which range to use on which time frame. Start with the bigger range and work from there. This range is obviously too big because these are the expansions and retracements I'm looking for. Range is still too big. This is the range I would utilize to measure order flow in this time frame because notice how price is utilizing the fractal ranges as support and resistance as well as the range lows and range highs, meaning this is the range I would utilize for this time frame. Now if we look at ES, if you remember, we had price distortion at this price range here. So we had price distortion here on NASDAQ where we went above the range high, where we went above this range here and then back below it. So if this was price distortion, if you were looking at ES, you could have anticipated this price distortion. Why? Well, because let's just look at ES on its own for now. What we can see is that price is displaced below this range low, which is now range high, meaning the invalidation of the sell program is this price range here. If we look at NASDAQ, the same applies. We displace below this range low, it's now a range high. Invalidation of the sell program is this price range here. If you play price out, what we can see is that price displaced above this range high, which is now a range low. But we would not consider this a change in the state of delivery. Why? Well, because ES has not produced CSD. Notice how we've rejected the high of the range high, meaning we can anticipate this to be a false change in the state of delivery, and this is in fact price distortion. And if you play price out, what we'll see is that ES, again, rejects the high of the range high. This is not CSD, this is price distortion until ES also displaces above here, confirming we are now in a buy program on both ES and NQ. So all I have to do when I'm looking at ES and NQ is I have to evolve my invalidations on both markets, and if both of them produce CSD, then it's CSD. But if only one of them produces CSD, it's price distortion. It's really as simple as that. And so if we continue, just going to play price out. Price now displaces below this range high. Want it to be utilized as resistance. Same on ES. Invalidation remains the same. Invalidation has now evolved to this fractal range on NASDAQ and to this fractal range on ES, meaning both of them need to produce CSD to confirm we're going to go back to the range high, i.e. a buy program is going to unfold. If you continue, notice how ES has closed above the fractal range, but NASDAQ has not, meaning this is price distortion. We're still in the sell program. If we continue, price then continues lower. Again, notice the wicks to the damage, bodies tell the story. NASDAQ has displaced below its respective fractal range. ES invalidation remains the same because we've not yet displaced below this fractal range. Let's continue. Both markets have now produced CSD. Invalidation for NASDAQ is this price range here. Invalidation for ES is this price range here. Invalidation for NASDAQ has now evolved to this fractal range because we've now closed above it, meaning both markets are now in a buy program. Both markets now invalidated the buy program, meaning we're now back into a sell program. So I'm going to turn these reds. If we continue, price is now retraced into the range high. What do you anticipate? Expansion lower. It's the same thing over and over and over again. This is very objective, no discretion at all. NASDAQ has displaced below fractal range, invalidation's evolved. ES, invalidation has now evolved to this fractal range because you displaced below it. NASDAQ, invalidation has evolved to this range high. If we now continue, invalidation for NASDAQ has now evolved to this fractal range because we displaced below it. ES reached the range low, meaning the invalidation for the sell program was this price level here, and ES has closed above it. But if you look at NASDAQ, well, NASDAQ is not, meaning on ES, this would be what? Price distortion. And so if we continue, notice how this would be CSD if you were just looking at ES, but because we're combining ES and NQ, we know this is price distortion. There we go. It was a fake CSD. Order flow continues bearish. ES has produced CSD. I'm waiting for NASDAQ now to displace above the fractal range. There we go. NASDAQ is now displaced above the fractal range. Invalidation for the buy program is this fractal range here. If we look at ES, the invalidation for the buy program is this entire range here. Why is it not from this level here to the SMR, to this low here? Well, the reason that's not the invalidation, because the low of the range low, i.e. ERD, is above the SMR, meaning we use the range low and not the SMR. If the SMR was somewhere here, then we would use the high of the range low to the SMR itself. But in this case, it's the range low itself. If we continue, we're in a buy program. Notice how ES has taken out the smart money reversal, meaning by definition, even if we took it out by one tick, this invalidates the buy program, validating a sell program. Even though we haven't displaced below this range low, meaning it's not a range high yet, the fact that we took out the smart money reversal for this buy model means that we're not in a buy program anymore, and we're in fact in a sell program. And so this is now going to be red. This is going to be red, and we're going to continue. Now seeing SMT. NASDAQ has gone into a buy program. We've reached a range high, so the invalidation level is now this level here, IRD. And if we look at ES, invalidation level is this entire range low, smart money reversal being here. Notice how NASDAQ has produced CSD by going below IRD, as well as this fractal range. However, ES has not, meaning this is price distortion. We don't see this as CSD on NASDAQ. We see this as a retracement lower to go higher because ES has not produced CSD. And if we continue, we can see that this was just a retracement on ES to go higher, and the same on NASDAQ, meaning it was a fake CSD. We've now reached the range high, so again, CSD requires price to displace below here. Invalidation on ES remains the same, this level here. So we're still in a buy program. Notice we produce CSD on NASDAQ, but we've not produced CSD on ES, meaning we're still in a buy program on both markets. Now ES has displaced below the range low, meaning this is now a range high. NASDAQ has displaced below the fractal range after reaching the range high, meaning this is now the invalidation, and this is going to be red. Both markets are now in a sell program. So if we continue, both in a sell program still. NASDAQ has now closed above this fractal range. However, ES is still in the sell program, and so I do not see this as CSD. I see this as a fake change in the state delivery, meaning we're still looking for shorts on both ES and NQ. Now, ES is displaced above the range high, meaning it's now a range low. Invalidation for the buy program is this level here. NASDAQ has reached the range high, CSD. IRD is the CSD level, changing the state delivery. And so as long as both markets remain above the blue boxes, we're in a buy program. If we continue, we can see NASDAQ has produced CSD, but ES is still in a buy program. Therefore, we do not see this as CSD. We see this as price distortion. And if you continue, and this is now current price, meaning for now, we're looking for higher prices because ES is in a buy program, meaning this here on NASDAQ is price distortion. Now, I know we've covered a lot. Order flow is very simple and it's very mechanical. If you're confused, it's because your thought process is incorrect. All you need to do is determine which range you're going to utilize on which time frame. You're then going to determine the invalidation level for whatever market you're looking at based on what current delivery program we're in. And then you're going to get a correlated market and do the exact same thing, because then you're going to be able to anticipate price distortion. If you do not fully understand order flow yet, it's because you're not thinking correctly. Watch this video as many times as possible until it fully clicks, and then you'll be able to identify order flow in a very mechanical way. And so that brings us to the end of this lecture. In the next lecture, we're going to discuss the drawn liquidity, which is the second step in the higher time frame protocol. And so I hope you found some value. And with that, I'll see you in the next lecture. Be safe.